Okay, my lovely friends, here we are, you and me. It is Friday, December 11th, 2020. Here's the story. As I am doing this video blog, it appears that volatility in this market is going to continue. Yesterday was frankly off the Richter scale. Like I explained to you, I got shaken out of 2 trades yesterday because of the wild swings in the market. Today, maybe no different. As I am doing this video blog, stock trading doesn't start for about 45 minutes. Stock futures are lower across the board. Look, the market's stupid. You all know that. This market is so stupid, so absolutely disconnected from any kind of reality because of easy money. I don't know. I don't know what to make of it right here. So as I said to all my lions yesterday in my newsletter, free for anyone who wants it, there is a link in the description of the video. I am going to sit out here. I am going to sit out and I'm going to wait for some of this volatility to dissipate. Then we'll get back in here and rip this market's face off. There's nothing wrong with sitting in a cash position for a little while. And then we get back in here. This has to level off at one particular time. Is the market on the threshold of a little bit of a pullback here? I don't know. Maybe that's why we're getting this volatility. You can see this kind of movement when a market is topping out. Now, I hate picking tops and bottoms. It's a losing endeavor. Anyone who tries to sit here and tries to point their finger at this market and say, oh, this is a top, oh, this is a bottom, generally they're wrong. So me and my lions, you are not in the business of picking tops or bottoms. If you're a trader in this market, you want to capitalize on trends. That's it. Trying to pick tops and bottoms will guarantee you going to the poorhouse. That is not what I want for any one of you out here. Let's talk a little further here. Cryptocurrencies remain under pressure. Bitcoin is lower. I've been explaining to all of you for at least a week that I would not be surprised to see Bitcoin test its recent low. When any asset drops precipitously and then bounces and then goes up, it's not unusual at all to get a retest of that low. Now, we need to keep our eye on this, okay? Personally, like I've been saying for a week, I would like to see Bitcoin test the recent low. The other major cryptocurrencies retest their recent low. I would like to see that. And I want to see how they react. If we get a bounce off, let's say, for example, Bitcoin, the other major cryptos, which fell precipitously recently, retest that low and then bounce off, that's very bullish. Now, conversely, if we retest that low, bounce a little bit, and then go through it on the way down, then that means we're going to take another leg lower. But my perspective on cryptocurrencies is not going to change in this environment. It shouldn't, in anyone's view. We know what's going to occur. Epic debt. What did we hear from the ECB yesterday? The European Central Bank is increasing its asset purchases by 37%. The Fed will follow suit. Now, what do? Do they just say, hey, you know what we're going to do? We're going to purchase more assets? No. They got to create the cash out of thin air and buy it. So this is bullish for cryptocurrencies. It's bullish for gold and silver, although we know what JP Morgan is doing with regard to silver and gold. It's a joke. Everyone knows it's them, but nothing will happen. Speaking of gold and silver, I just checked the futures here. Silver is about flat, gold slightly higher. The dollar right now is getting a little bit of a knee-jerk higher after this. The dollar's dying. The dollar is dying before our eyes, and I believe that you understand what's going on with Congress kicking the can down the road. They're buying time. If you don't want to listen to Greg Manarino, that's what CNBC said. Congress is buying time here. They want to wait for the go-ahead from the Federal Reserve. The Federal Reserve is where the cash is coming from, okay? We don't have $1 trillion laying around. So the Fed has got to go to the Fed and get this nearly $1 trillion stimulus, which is going to boost this market even higher. Maybe that's what the market's waiting for too. I mean, look, it's easy money. It's the drug. Easy money is like heroin for the market. And the market, again, is completely disconnected from reality. It's just floating on oceans of debt. Crude oil right now is about flat, but crude oil has taken off as of late. And again, that's stock market positive. So that's the scenario. That's where we are at right now. We need to keep our eyes on a few things here. The 10-year yield, 0.89. You know how important it is. Okay, we got the 10-year yield coming down a little bit. That's a fear sign in the market, and we're seeing the volatility kick up here. Expect this volatility to continue here. Like I said, how am I taking advantage of it? I'm sitting out. I want to sit out of this market here. I want to just take it in, let the market figure out what's going to happen. Let's see what happens with a do-nothing loser Congress who's deliberately kicking the can down the road. That's all they are doing to buy time, waiting for the go-ahead from the Federal Reserve as our economy is in free fall. Free fall. I think you know that. All right, pretty much that's it, people. Lots of important things in this video blog. Please share it, get it out there, and I will see all of you at the end of the day. It's going to be just lovely. See you later.